Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Stocks rise despite another weak jobs report. What is up with that? Let's see if we can't find out from our panel members. Equity strategist Todd Bunton, ETF research director Nina Mishra, and senior equity strategist and market timer Kevin Cook, all here with us to try to put this in perspective. So Todd, you actually think that that is indicative that the pullback might be over?
I think that was a good sign. You saw the market soar higher on Friday despite a disappointing jobs report, and if you look, the December revision was very minimal. So that's a good sign that maybe there's some support to the recent sell-off that we had. I mean, we're still down about 5% year to date. That's a nice little healthy pullback there. Not to say we can't have further weakness going forward, that things aren't going to be volatile. I don't think the raging bull market will just automatically resume, but that was just a good sign that buyers came in on Friday despite weakness. So
are you committal or non-committal? Pullback over, pullback not over?
Well, I don't think we see lower lows than we have this year. Not yet. Not over probably the next 4 to 6 weeks. But it's in terms of, are we going to start soaring like we saw in 2013? No.
I don't know if my friend Kevin over there agrees with you totally. Kevin, you say there's more downside, huh?
Yeah, I think we will revisit the lows and probably take them out. I think February is going to be a weak month or a challenging month. Todd's right that to see the market rally the way it did in the face of lukewarm jobs data was encouraging. But I think it was just a typical oversold bounce, and the shorts were getting chased away. The jobs data actually wasn't that terrible if you look under the hood. Mm-hmm. There were some good signs. So it's more of the same. In other words, it's more of the same kind of job growth we had below the average of 2013, which was getting close to 200,000 jobs a month. But technically, I think the market is suffered some damage, and I would actually prefer to see it test lower here, because if we rally right now up to 1850, that tells me the market is trying to put in a top, like an intermediate term top, and then we are going to have our spring correction already full-fledged. What I'd rather see is let's take some more of the bullishness off. At the end of December, the Investors Intelligence poll got to 60% bulls. Actually, it got to like 57%, and then in January it soared to 60%. And that's usually a sign of too much optimism, too much bullishness among advisors and newsletter writers. And so we've worked some of that off, but I don't think we've worked enough of it off yet. So I think the market sort of pulls everybody back in, but we don't get through S&P 1820, and we make another run for S&P 1700.
Are you eyeing up 1675 on the downside?
I think that should be good support. I think the bull market is very much intact, and threatening 1650 greater than a 10% correction would sort of destabilize that. It tells you that there'd be some heavy institutional selling. We just had one fear-driven drop, flushed out some weak hands. Stronger hands came in, but I think February is going to be a very challenging month, sideways to lower.
Nina, I want to bring you in here. The bounce that we saw in stocks after the jobs report came out back on Friday, how much of that do you think was attributable to the hope that the market had that it might have been just bad enough to put the brakes on taper?
Yeah, I do not know. There could have been 3 reasons for that bounce on Friday. Maybe the market went back to that bad news is good news mode, or maybe investors believe that weather was the main reason. And being in Chicago, I think we can totally believe that weather could have been the main reason. Or maybe investors do not really care for the government data. They have more trust in ADP numbers, which were not bad. So those could have been the reasons. But that said, it was a real nice recovery despite sell-off on Monday and Tuesday. Market bounced back, finished higher for the week. In fact, all the sectors finished higher for the week. So that was a good trend. So I think long-term bullish trend remains intact.
Also coming into focus this week is the new Fed Chair Janet Yellen's first testimony on monetary policy to Congress. That takes place tomorrow, February the 11th. Anything coming out of that, do you think, or is it going to be just more of the same?
I don't think so. I think that she's a pretty known entity, being the leader of the next dovish phase of the Federal Reserve, and of course, players will be looking, since this is more of her first public appearance as the new chief, for nuances, language, hints, but I really don't think much should be taken from it. I think, like today, Monday is going to be quiet. Going to Tuesday is going to be quiet as the market sort of waits to hear.
What do you think, Todd? Any clues coming out of her testimony?
No, I don't think so. People will just kind of be measuring her and seeing. I don't know how they're going to look for clues. They've never
heard her speak before.
Well, basically, essentially, yeah, that's right. And in terms of is the Fed going to slow the taper now? And in light of the weak jobs report, I don't think so. But of course, they're not going to meet again until March. So they've got a lot more data to look at and decide. But if you hear language out of people like Fisher, I know he's been more hawkish, but he said they're looking at the total momentum kind of economic data, and he said that's still positive.
And two new hawks are voting members now
Exactly.
too, Fisher
Yeah.
and Plosser.
Yeah.
Nina, how are you viewing this new Fed chair?
I don't expect any major thing coming out of the testimony, and I agree with Todd. I don't expect any change in the taper program in the March meeting, because they have said that the taper will be data dependent and it's not on a preset course, but they don't bother much about month-to-month data. They look at several months of data and the trend. And the trend of growth is still there. And I also saw that many FOMC members have of late said that they are inclined to remain on taper track.
And really, then, for the rest of the week, there's not much out there on the
Yeah.
docket that can influence the market, is there?
We've got, I think, retail sales on Friday. That's always one I like to look at, because in this consumer-driven economy. But otherwise, kind of a little bit of a lull here. I think earnings, we still have a lot of earnings coming out. That's typical in fourth quarter earnings season because they have end-of-year data. So you see a lot of smaller cap companies report this week, and even some retailers later on. So that can always be a market driver. But a little bit of a lull here.
So more of the same good enough for now?
Yep.
Okay. Thank you all for that. Don't forget, these folks are going to share their top stock picks with you in our next segment, so click on over.